me by Crypto Wizard, but I majorly spend most of my time working at Glassnode, putting out charts, weekly report on Bitcoin market usually, and sometimes just covering the other markets like Ethereum. But everyone know me, Crypto Wizard, Arch Analyst, and Glassnode. And I'm really happy today to, like you said, start to put number on the thoughts and theories and quantitatively look at what's happening with these ETFs.
Awesome. All right. So let's begin. Here, I have just a few charts to give people an update about the flows of Bitcoin ETFs. You should see our charts now. This is supposed to be the last one. I'll go to the first one. All right. So here I just have a monthly flow data of Bitcoin ETFs. And you can see that. Let me just move ourselves to the side. You can see that the ETFs began the first quarter with a massive sized flow and extremely positive for the price. And even a few months before this, when the news of ETFs came out, we were somewhere in 16 to 20K range. Little by little, as the news came out that BlackRock is changing tune and actually making progress on ETFs. Each of those major news events, if you look at the price chart, you'll see they have a significant effect on the price. So it took us all the way to 30, 40 range. And this huge flow in this first quarter pushed us to the all-time high, above 70,000. But then as soon as second quarter began, April, a lot of people perhaps began to rebalance, or the initial burst of inflows slowed down. So we had a negative month, and this caused a lot of people to begin saying, ETFs had no impact, or maybe it's done, it's over. But then they came out with another 3 months of amazing flows, weaker than the first one, but pretty good. Another negative. Then we had a great positive month, and this month has been actually pretty weak. So far, it has been the weakest. Yeah, and with that, let's move on to the next one. All right, here I just have the weekly chart. I think it's a lot. It's very much the same as the previous one, which was monthly. Says the same ideas, except here I've also had the cumulative value. $18 billion have been accumulated through these ETFs. It's extremely large and important, and that's a testament to the relevance and the power of these ETFs. Of course, the biggest part of the accumulation was at first, but it didn't really stop. So it just goes up, slows down a little bit, and then goes up again. It slows down a little bit, it goes up again, slow down, and we will expect the same pattern, because it initially you expect an explosion, but over time it should stabilize and keep a constant flow, constant positive flow of money going. And that's exactly according to the plan. And these are the total numbers of flows. If you're interested, BlackRock has brought $21 billion. GBTC has sold 20 billion. Fidelity, almost 10 billion. And the other ones are pretty much small. Perhaps notable ones are ARK and Bitwise, each more than $2 billion. And putting all of it together, $18 billion have flowed into the ETFs. Here's last week. Or this week, actually. This week has not been great, as we all know, and also the price action says. Generally, $13 million have overall gone out of the Bitcoin ETFs. Everyone has lost money, but BlackRock has kept bringing in new money. So that's very interesting. Everyone else sells, but BlackRock keeps buying, or in worst cases, it only stops buying. It probably has had only 2 or 3 instances where there was outflow out of BlackRock, which is amazing. Now, another important thing for this week is that even though everyone else is selling, there isn't anything else that GBTC is selling, because they sold out all they had, and they kind of drew down the AUM to a very low level, and pretty much whoever is left there is not planning to play short-term games with their money. So at a time where everybody else is selling, GBTC has stopped selling, and we can also see yesterday's flows. Again, same ideas. BlackRock brought in $36 million, which is pretty huge, but for BlackRock, it's still not a great day. Fidelity lost money, ARK lost money, and and everyone else pretty much the same. And in total, it was a negative day. Now, on this chart, I only have a single point. I show both BlackRock and Grayscale flows, and you will see that anytime Grayscale had one of those massive outflows that caused the market to panic and in fear, we also see a proportional spike in BlackRock's flows. This is one of the best ways to answer the question whether there was substitution between Grayscale and BlackRock, and this is a pretty strong indication that it was. A lot of people who sold their Grayscale switched it to BlackRock, but the pattern is changing a little bit. You see now spikes in BlackRock are happening independent of Grayscale because pretty much all the exodus has already happened. And this chart says the same thing. This is Grayscale's 5-day moving average outflow. Initially, you remember it was huge outflows, a little bit low, but then another huge one. Then it went back all the way to zero, and then started a few more smaller waves of outflow, and then now we are actually slightly positive. So Grayscale is kind of lost all the steam and power. It gets a little bit of positive, a little bit of negative. So, but all the sell pressure from it, at least for now, has subsided, and they've lost a ton of their AUM. Like they're down to 32% of what they originally had. So pretty much, all the hot money is gone and the sell pressure from there is drained. And here is just a beautiful chart. I really like it. It's kind of shows the mountain of the flows by adding all the ETFs together. The red one, obviously the biggest one, is BlackRock. Then we have Fidelity and all the little ones, and ARK and Bitwise. And even though GBTC was really scary at the first, but now it has lost its influence. And from now on, we are just, we have just more than 10 ETFs that are constantly taking Bitcoin to the Wall Street and convincing more and more traditional asset managers to allocate to Bitcoin. All these companies have expenses, they have operations, they constantly talk to investors, they constantly work with Wall Street to convince them to join the space. So now we have several institutional advocates that advocate for Bitcoin for their own game. And when somebody has something to gain, that's one of the sure ways that they will do whatever they can to bring more money into that space. Okay, so that's all I have for the update. Then I'm going to have Z explain to us how we can quantify the actual impact of these ETFs on the market price and various aspects.
Sure. I think I can just show the. Can I share my screen now? Oh,
Yes.
lovely. Sure. Yeah. Great chart, especially the last one, Sina. I really love it. You can see how human might be actually focusing on one side of the story and not knowing the other side, and it might affect your behavior. Like you said, GBTC was showing a strong outflow, but if you really look at the net flow to the ETFs, you could see exactly how it was like they were doing pocket to pocket. It was actually moving out of GBTC and going to BlackRock. It could be for many reasons. It could be there was like a difference in the fee they're going to charge their customers or clients. That was one of the big factors, if I'm not wrong. And also they were talking about like BlackRock has currency hedged ETFs in Canada, for example. So that vehicle could actually help people to be like interested more in BlackRock as well. So the incentive was there, and you could see the outflow from GBTC to BlackRock. And when you look at the net flow, actually, since the day that most of the US ETF got accepted, you could see in less than a year, we are seeing around 900,009 BTC, like it's close to 1 million BTC actually managed by these ETFs now, which is close to 55, $58 billion if we look at the price of Bitcoin today, 62, 61. So that's a huge number. When we look at this big chunk of Bitcoin from supply, it's almost close to 4 point, if I'm not wrong, it's around 4.5% of circulating supply. So when we want to talk about the quantitative assessment of the ETF's impact on the market, we can start with this. Close to 5% of the supply is now being managed, traded, and move around by these ETFs clients. It's huge, less than 1 year. And like you said, right now BlackRock is just running the show. They're the biggest. GPTC used to be the biggest one, but like we just explained, you could see the outflow from GPTC to BlackRock, and now BlackRock is the main player there. And that's huge, less than 1 year. Imagine like there was some ETF in other commodities being launched in the US, and less than a year they could actually have their hand on 5% of the circulating supply. It would be huge. And Bitcoin actually broke some records there. So in terms of the other quantitative aspect, let's look at the cost basis of these huge players now. Like why cost basis is important, because look at this on-chain data or any other data that mostly I'm really interested is about human psychology. And one of most important factors in human psychology is profit and loss. And that's what makes the profit and cost basis price models very important. Why? Because
So wait a second.
yeah,
Explain to us what is the cost basis.
yeah. So cost basis is, let's say we're talking about the specific cohorts or subgroup of investors. Let's say the BlackRock clients, or let's talk about miners or people who have their coins on a specific exchange. Cost basis is an average price that those players have acquired the coins at. Let's say we have 1 million coin at ETFs now. We want to know by average what is the price they paid for each Bitcoin. Why is that important? It is important because when the price go way above that price, we might have a selling pressure due to people who want to actually take some chip off the table and actually lock some profit in. Or when the price get close to their cost basis, if we have a correction in the market, if the market is actually dropping, we might see some sell-off pressure actually slow down because they don't want to just realize some loss. In other
So
ways, go ahead.
just to summarize it, you have in this chart computed the total, the average price that ETF holders acquired Bitcoin at.
Yeah,
And what you're
that's
saying is if the market price is significantly more than that, that creates psychological reasons for people to sell, or vice versa.
yeah. It could be so. It could create the incentive. That's the starting point when we want to do a research. So we should be really careful about actually establishing a rule and stick to it. The thing we can say for sure is the cost basis is gonna create a sell or buy pressure that has the potential, but we have to check it. For example, like if you look at the ETFs, the top three one like GBTC and BlackRock, their cost basis is around 54 to $59,000. So you could see since I don't know, July and June, every time price got close to that price range, you could see the bottom was in. We can say with great certainty that that was actually possibly because the ETFs were actually starting to slow down their selling pressure because price was getting close to their break-even point and they didn't have the incentive to sell. That's actually a good sign. That means they are not really inclined to realize loss. As soon as price get close to their cost basis or average acquiring a price, they lose the incentive to sell. That is really interesting. I'm not saying it's going to hold the price forever. It might break down, but so far it acted as a resistance support in the market, and it's really interesting. That shows the influence of these players in the market. It could The picture might bigger than this, but so far it's been really interesting.
Can you
So
show us the latest cost basis values?
yeah, sure. As of today, like 3rd of October, we talk about like Fidelity 54, BlackRock 59, and Grayscale 55.9, which is like a little bit different, and but still they're almost the same range. plus minus 5%.
So, for example, Fidelity investors are on average $5,000 in profit.
If
Same thing for Grayscale, but BlackRock investors are pretty much at the cost basis now.
exactly. And this is mostly because when we weight the cost basis, the bigger you are, the closer you are to the price, because you are actually having more weight in your in the average cost base of all exchanges. But when we look at individually, it would be interesting. I would really be keen to see 2 years from now, are they going to be really different? Like, do we see clients of BlackRock actively move their coin out and into ETFs, and their cost basis is close to the market price? Or no, they're really huddler. They're not going to move out much, and the price is going to be really, really, their coin is going to be almost always in profit. It would be really interesting if you see any difference between the clients of these ETFs. But so far, we're pretty close, you could see. To actually add some spice to this analysis, I really always try to, and this is my like main purpose. Always data helps you to look at the phenomena and make a better decision. One of the biggest, I think, mistakes the community does is not updating themselves with the impact of different players in the market. For example, miners. We hear about, okay, that miner is selling 200 Bitcoin or 1,000 Bitcoin. What are these numbers actually? What was the impact of these numbers? How impactful they are? So miners in general have been the main holder in the, in terms of the supply they hold. But right now they're not, and you could see how that is affecting the weight of each players in the market. For example, here the orange bars actually showing the daily issuance, the potential sell pressure by the miner, the number of coins or the dollar value of the coins that could be deployed to the market by miners. The green and red line here is showing the inflow and outflow to the ETFs. So even less than a year, it's just really fast. The inflow and outflow to spot ETFs reached to 400 million per week, on a daily basis. And the outflow reached to minus 500 million per day. That's the scale we're talking about. But for miners, it is between 30 to 60 million. That's the daily sell pressure they potentially can actually impose to the market. So when you look at the ratio, the magnitude of flow to the ETFs in and out is almost 5 to 8 times bigger than miners. Let's say all money going to ETFs are actually buying pressure, and all coming out is sell pressure. If you look at that range and look at the daily issuance, which is miners inflow, there's a ratio between 5 to 8. So when we're talking about miners, we should be really careful. They're not as influential as they used to be. Just look at the ETFs. They are 5 to 8 times bigger than miners in less than a year. And I have excluded the exchanges. If you look at exchanges, they are bigger. They're almost the same size of ETFs now. If you look at the MacGox or other players or governments, in a short period of time, they could be much, much more effective than miners. So my conclusion here is, if you want to talk about miners in general and compare the impact they might have the market in the long term, especially, it is not, it's not even close to what ETFs can do to the market. So if you want
So,
to,
so when
yeah,
people say, like, after a halving, the supply is caught, and that's the most important thing that matters, what you're showing is just one major factor, which was the ETF approval, had several times more of an effect on the market.
exactly. And to some extent, you can tell that 4 year cyclical behavior might change. I bet on that, because people used to say 4 year, 4 year because of having, but right now, the what's happening behind the scene, for example, like just what we showed, the ETFs impact are going to be much, much bigger than the miners, and that 4 year mentality, hopefully, and I really like that happen actually, it's going to just vanish, because that 4 year sell pressure by miners, the amount of coins they're mining per day, or what they get out of fee market, is not comparable to inflow and outflow of all these big players. So maybe we should stop talking about it, or we should measure it and then with some data prove our point. So that 4 year cyclicality might stop, and we might actually become a market that the cycles are a function of parallel markets like the stock market, or I mean, um, what's the geopolitical problem happening now? That could be 10 times bigger than the miners sell pressure.
The
So
only
that,
thing is
mm,
miners are one directional. They're always sell pressure, but ETFs might go both ways. So
mhm.
maybe in certain periods of time, ETFs become less important, but they when the flow really begins to or out from them, they kind of overpower everything that the miners can do.
Yeah, could be. Yeah, like I said, in long term, that's the term I use because I'm always skeptical about conclusions. So they might have some accumulating some coins, and let's say in a weekend or a couple of days they have a sell pressure. But if we want to talk about the sustainable effect on the market, what we see so far since January, they are not as big as they used to be, and understandably because their share from supply is really small compared to other players.
Yeah,
If it
sometimes I remember when analyzing ETF flows, you see like 1 day flow of ETFs was bigger than a month of impact of all these miners. So
Yes. Uh, yeah, it's amazing. It's amazing. That being said, because so far we talked about flow, we talked about like the ETF share from the supply. But let's imagine we have a closed system, which is the network, and when the money coming in, when the capital actually been injected to the network, we can see the market go up, obviously. And when we are experiencing some sort of capital outflow, market is dropping. That's the long-term effect of capital on the market, right? That's just it's almost self-explanatory. Now we have the tool in on-chain to measure the net capital inflow in the market, which is we go with realized cap, but I don't want to go too much about the details. But realized cap is literally looking at the net capital coming into the market and going out of the market, and cumulatively using the realized cap, we can say for now today how much money was injected to Bitcoin network versus market cap, which is literally the price multiple the circulating supply, which is I really don't believe in market cap, but realized cap is closer to the true value of the money that been locked in the network. If you look at the change in the realized cap, or look at how much money since the day that ETFs were launched came into the Bitcoin market from all sources, the number is somewhere around like I think it's around $210 billion. That's an estimation. That's not exact, but it's really, really, really better than market cap. So around $210 billion came to actually be injected to the market. It could be you, Sina, buying. Let's say your cost basis is 20,000. Someone come and buy your Bitcoin 25,000. Okay, that person buying that Bitcoin off you is injecting $5,000 to the market. Now we can, and let's say your cost basis is 20,000 and I buy your Bitcoin 15,000. You are actually causing 5,000 going out of the network. So when we look at the aggregated value, when we look at, okay, everyone are selling and buying, but what is the net value of money coming in and going out? Since the day that ETFs were launched, around $210 billion was injected to the market. And we can actually look at the ETFs and see every coin they brought in to their their position. They bought it off the market and they put it in the ETF wallets. That price that they paid for is above or below the cost basis of the market in general. If it's above, they injected money. If it is below the cost basis, so they're losing money.
so
So if
200 billion this year.
exactly,
And
so
I can tell you that's almost as big as Amazon's revenue.
that's
So,
it's
yeah.
crazy. It is crazy, and we are not looking at the futures market because futures market can bring some money as well by creating the discrepancy between the futures market price and the spot price. That creates an arbitrage opportunity, and that could be calculated actually as a input money. But we just sticking to the spot market. The total money that was injected to the Bitcoin network is around 210. When we look at the money that was injected by the ETFs, is around $932 million by ETFs. So that 200 that was injected into Bitcoin network, and around 900, let's say close to 1 billion, is around 4.4% of the money injected to the Bitcoin network since January 1st was via the ETFs. So ETFs created 5% capital inflow. They caused capital flow. That's only when we look at the money. Of course, the sentiment that got actually improved due to the ETF launch, that you should factor that. We cannot calculate it here. But when we look at just the money that was injected, it's around 5%. So imagine in less than a year, ETFs that was launched in the US could create that momentum that absorb 5% of the capital flow so far. That is huge. Like that, the effect is like I cannot even put a number. 5% is small, but imagine that's only 1 year. So if we continue to introduce that much money, if we continue to see ETFs lectures and presentation across the world, like yesterday I saw a slide in Brazil, they're using Bitcoin as a constant example of this hard money, and they look at the performance during the geopolitical conflicts, during the recessions, and they're using Bitcoin for their clients as an example that could be actually a way to hedge against all these unknowns. You could see that 5% is growing. It's crazy. So to close so far, both from the supply ownership and also from a capital inflow perspective, ETFs were close. I mean, inflation around 4 to 5%, and that could actually go up. Especially at the beginning, it was around 7%, but over time, other players actually try to inject money, and the rate start to drop. But the bottom line is around 5% of the supply, and also around 5% of the capital inflow is attributed to
Yeah.
ETFs.
So let me summarize it. 5% of the real money that, on a constant basis coming to Bitcoin space is through the ETFs, and that's massive. That's significant through
Yeah,
one development.
one move. Now everyone were talking about, okay, Ethereum is actually having an ETF. Well, it was a big move because launching ETF for an asset, digital asset, is in general it's a really huge thing happen. But ETF did not that have that effect for Ethereum, and that everyone talk about it qualitatively, which is true. Like qualitatively, you can see the data that they launched so far. The ETH BTC ratio is dropping, but let's actually measure, because in some way we can use this inflow or the attraction of the Tradify to all these ETFs as a proxy to how much they like these assets, right? So far, we can look at how much they had like inflow, outflow, and judge it. Actually, see, do they like Bitcoin or Ethereum? Do they see it as a asset that they might like? I think that's a fair proxy to that. When we look at Bitcoin, because you showed in your slide at the beginning of the bull market, you could see actually there is a huge correlation between price and net flow to the BTC ETFs. You could see, and usually some market rallies was correlated as well. So you could see the weight of these ETFs on the price action. But my point here is, if you look at the weekly average of inflow per day, between $400 million inflow and 150 outflow is the size of the inflow outflow to the Bitcoin ETFs. So just remember that number. These days, like you said, we see a weakness, even though the recent rally to 65,000 was accompanied by almost 150 million per day inflow to ETFs. So they still have their weight, but you could see there is a decline in the maximum inflows. So you could see there's some weakness there. But the range is between minus 150 million outflow to 400 million inflow per day. Dollar, it's in dollar for Bitcoin. When we look at the same chart for Ethereum, first of all, you could see it's mostly outflow. So it's GB, I think it's grayscale. And when you look at the daily, it is somewhere between around 12 million to minus 12 million, positive 12 million inflow and minus 12 outflow, 12 million outflow. So the scale is 12 million minus to positive versus 150 to 400. Right off the bat, you could see dollar wise, if you look at the dollar denominated value, Bitcoin is much bigger. It's just in order of 10 to if you look at the positive side, is around like um,
Let me
three
tell
times,
you.
30
So
times, almost 30 times.
24, no, actually a lot more than 24 divided by 550, 5%.
Oh yeah, if you look at the absolute, yes, it's
Yeah.
the smaller. But let's be fair here, because yes, it was almost expected that Ethereum is smaller because it's in a smaller market anyway. So the way we can look at this in a more um, understandable way, or a comparable actually way, is to look at the inflow outflow to ETFs for both assets, but normalize it or divide it by a spot volume of each asset. In that way, we are looking at relative comparison between the effect of these ETFs on the spot volume. Why a spot volume? Because the way they are buying these coins and putting on their wallets is closer to the spot trade, right? It's not a future trade. If we normalize those inflow outflows for Ethereum and Bitcoin by their own spot volume, you could see something very interesting. First of all, for the Bitcoin, you can see this is the positive and negative, of course, because ETFs has inflow and outflow. When you look at the normalized value between 17%, for example, and it was in June 3rd, up to 17% of the spot volume was the size of ETFs inflows, net flows. That is crazy. But the typical number for Bitcoin is between 4 to around 8%. You could see 4 here, 4% to 8%. That's the typical effect of the ETFs on the spot market. But when you look at the Ethereum, it's between 0.5%, and recently it was late September, 1%. So the ETFs that was launched for Ethereum at max affected the markets 1 to 1.5%. I mean, if you take the spot market as a reference, but for Bitcoin, it was affecting between 4 to 8%, and sometimes even up to 17% of the supply. Sorry, spot volume was actually uh, was the size of the ETFs. So you could see, even if you take a relative magnifier and look at these two, Bitcoin has been Bitcoin ETFs has been much more influential compared to Ethereum. That is really interesting. It might change in short term or long term, but so far, the TradFi, the big old man that has a bunch of money, so far decided to deploy that money into Bitcoin. What's going to be the next step? I don't know, but so far it's really interesting.
So let's summarize those statistics. Compared to the daily trading volume
Mm-hmm.
uh, between Bitcoin and Ethereum, what was the percentage of that volume that came from ETF trading
Yeah.
in Bitcoin versus
Yeah.
Ethereum?
We are here just comparing the inflow and outflow of the uh, Bitcoin to the ETFs by the trade volume. I know it's two different concepts, but that's what we had at the moment. When we look at this, the size of the Bitcoin in and out to ETFs were around 4 to 8% for the Bitcoin. It was equal to 4 to 8% of the spot volume for Bitcoin. But for Ethereum was 0.5% to 1.5% of the Ethereum spot trade volume. So
Mhm.
size of the market was measured by the spot volume. Then to normalize it, we use that size of the market to say, okay, that $400 million inflow by Bitcoin ETFs to the market or to the ETF wallets was close to 8 or 4% of the market in general, Bitcoin market
So,
in general.
so I can say it like this: like the relative importance of ETFs, relative weight of ETFs was 6 times more
Yep,
in Bitcoin compared to Ethereum.
you said it exactly. That's just the last, because we have to look at the Ethereum history. I think it was like 3 or 4 months ago. So throughout that 3 or 4, I have to do not have the exact date that they start to launch. I think it was let's see, it was around August, early August. So since early August, that, like you said, that ratio is really valid. Like it's 5, 6 times bigger in Bitcoin the case. So that's really interesting when we look at the ratio between the effect of these ETFs on their own market. Yeah, yeah. I think that sums it up, and we try to actually show the audiences what is the effect of ETFs mostly on Bitcoin market, and at the end, I thought maybe compare with Ethereum and explain why or why people saying Ethereum did not have that much attraction for the TradFi. We can show this by this chart that we just showed the audiences as the last slide.
Very interesting. Very interesting. So I think today was one of our most data-packed sessions, and we hit a lot of ground in just 40 minutes so far. And by the way, 1,200 people are watching. So thank you guys for being with us. I see a lot of comments too, but it's just hard to answer them as we are showing the charts. But we will reply over time. Definitely keep those comments coming. We will read every single one and send a response to you in whatever platform you're submitting it, because we are now live streaming from 21st Capital's YouTube channel, Z's YouTube channel, and on Twitter. So in any of those platforms, we will see your comments and respond. So we looked at the latest ETF flows, monthly, weekly, daily. We looked at the effect of these ETFs in terms of the percentage of the real capital flow that they demonstrate. And Z beautifully showed us that 5% of the real dollars that are entering the Bitcoin are coming from the ETFs. Very important statistics. And he also showed us that the ETFs have held, what was the percentage? 5% of the total supply. So we are hearing a lot of fives today. 5% of total supply is now held by the ETFs. And also, when you look at the inflow or outflow of Bitcoin spot ETFs normalized by the spot volume, it's 4 to 8% of the spot volume. Now, that number, the same number, is between half and 1.5, so almost 1% for Ethereum. So relatively speaking, Bitcoin spot ETFs were a much bigger deal for Bitcoin than Ethereum, even when you normalize by the different trading volume of the two different markets. So a lot of alpha here, a lot of important ideas that are based on deep research and all the great work that Wizard or Z does. Well, we really appreciate that. Do you have any other closing arguments? And also definitely show the audience where they can find you, where they can find your research, and on what platforms.
Oh, all good. Thank you for having me, Sina. I'll always be happy to be on this show. And like Sina said, post your questions. I will try to get to all of them. You can find me mostly on insidetheglassnode.com. That's where we put me and my team. We put a report on a weekly basis. Insidetheglassnode.com. But I go by Crypto Wizard on all social medias, and I'll be happy to address any question or concern or suggestion if the audiences have. And it was great to be with you, Sina.
Sure. Make sure to follow Wizard on Twitter and his content on Glassnode as well. He's the brain behind a lot of the reports that Glassnode generates. So one of the best follows. Well, thanks a lot, Wizard. Appreciate your insights today, and we look forward to having you again in the future.
Bye, Sina. Bye.